Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Acm Research Inc. Annual Report. Acm Research Inc. offers a diverse range of businesses and services that cater to the needs of wafer assembly and packaging customers worldwide. The company's product portfolio includes capital equipment for various manufacturing processes, such as wet cleaning equipment for front-end production processes. One of the key areas of focus for Acm Research is the development and sale of advanced cleaning tools. These include single wafer, serial processing tools like Ultra-C SAPS-II and Ultra-C TEBO-II, which are used to remove random defects from wafer surfaces or interconnects. The company also offers high-performance cleaning tools, such as the Ultra-C Tahoe wafer cleaning tool, which uses significantly less sulfuric acid and hydrogen peroxide than conventional tools. In addition to cleaning equipment, Acm Research provides a range of advanced packaging tools, including coaters, developers, photoresist strippers, scrubbers, wet etchers, and copperplating tools. The company also offers dry processing tools like the Ultra FN furnace, which is used for film uniformity, as well as semi-critical cleaning systems that include single wafer backside cleaning, scrubber, and auto bench cleaning tools. Acm Research markets its products under various trademarks, including SAPS, TEBO, Ultra-C, Ultra-FN, Ultra-ECP, Ultra-ECP MAP, and Ultra-ECP app. The company sells its products through a direct sales force and third-party representatives to customers worldwide. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to skyrocket. The sudden surge in a company's stock price is often a result of a combination of factors. One key reason is the release of positive earnings reports, which indicate that the company is performing better than expected and has a strong financial outlook. This news can attract investors who are eager to capitalize on the company's growth potential. Another factor that can contribute to a stock price increase is significant developments in the industry or market in which the company operates. For example, if a company is at the forefront of innovation in its field, it may experience a surge in demand for its products or services, leading to increased revenue and profitability. Additionally, changes in leadership or management can also impact a company's stock price. A new CEO with a proven track record of success or a bold vision for the company's future can inspire confidence among investors and lead to an increase in the stock price. Finally, external factors such as mergers and acquisitions, partnerships, or government policies can also influence a company's stock price. If a company is involved in a strategic partnership or acquisition that expands its market reach or increases its competitiveness, it may experience a significant boost in its stock price. In summary, a combination of positive earnings reports, industry developments, leadership changes, and external factors can all contribute to a sudden surge in a company's stock price. Acm Research, Inc. market capitalization of $3 billion is materially smaller than most of its industry peers of roughly $11 billion. Acm Research, Inc. trades at a lower price-to-earnings ratio of 30 times and a lower price-to-book ratio of 2.33 times relative within the industry. This makes the stock valued slightly lower than its peers in the industry. This likely suggests that investors are less interested about the company, or it could be that the stock have not caught up to the industry valuation and should further be investigated. The company maintains a moderate leverage profile, with liabilities making up 41% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline can be identified through various factors. On one hand, increased sales and marketing efforts have contributed significantly to revenue growth. Companies that have invested heavily in these areas have seen a substantial increase in their top line. Additionally, expansion into new markets or geographies has also been a key driver of revenue growth. For instance, companies that have successfully entered the Chinese market have experienced significant revenue increases. Another factor that has driven revenue growth is the development of new products or services. Companies that have introduced innovative products or services have seen an uptick in their revenue. Improved operational efficiency has also contributed to revenue growth by reducing costs and increasing profitability. On the other hand, a decrease in sales and marketing expenses has led to revenue decline for some companies. Furthermore, a decrease in gross profit margin has also been a contributing factor to revenue decline. Government subsidies have played a significant role in revenue growth or decline for several companies. Stock-based compensation has also had an impact on revenue growth or decline, although its effect is less consistent across companies. Lease liability has been another factor that has contributed to revenue growth or decline for some companies. Overall, while these factors are important drivers of revenue growth or decline, it's essential to consider the broader financial context and limitations of the available data. The net income and profit margins of a company underwent significant fluctuations between 2023 and 2025. In some instances, net income decreased from 2023 to 2024 due to factors such as increased raw material prices, general inflation, and excess inventory. However, in other cases, it increased due to improved market conditions or reduced competition. Profit margins also experienced changes during this period. While they decreased in several instances due to increased competition, higher raw material costs, and regulatory risks, they increased in some cases where the company was able to pass on price increases or achieve cost savings through consolidation. The reasons for these changes were varied and complex, involving factors such as fluctuations in foreign currency exchange rates, seasonality in the semiconductor industry, and government policies. Additionally, the loss of major customers, consolidation of the chip industry, and failure to achieve widespread market acceptance of new technologies also contributed to the changes in net income and profit margins. Overall, the company's financial performance was affected by a range of internal and external factors, resulting in significant fluctuations in its net income and profit margins between 2023 and 2025. The company's ability to generate positive operating cash flow has been inconsistent over the years. In some years, such as 2024, the company generated a significant amount of net cash provided by operating activities, totaling $152,450. However, in other years, including 2025, the company experienced a net cash used in operations, indicating a decline in its ability to generate positive cash flow from core business operations. Despite this inconsistency, it appears that the company has been able to cover its expenses through financing activities. In 2027, for example, the net cash provided by financing activities was $92.5 million, suggesting that the company has sufficient funds to meet its obligations. Additionally, in some years, such as 2024 and 2023, the company's operating cash flow was positive, albeit at lower levels than in other years. Overall, while the company's ability to generate positive operating cash flow is not consistent, it does appear that the company has sufficient funds to cover its expenses through a combination of operating and financing activities. The company's debt level and interest expenses have undergone significant changes over the past few years. According to the financial data, interest expenses increased by 32.8% from $5,784 in 2024 to $7,684 in 2025. This substantial increase is also reflected in the net interest expense, which decreased by 157% from -$883 in 2025 compared to -$560 in 2024. However, there are conflicting reports on the change in interest expenses. On one hand, it is stated that interest expenses increased by 68% and 159% from 2024 to 2025 and 2023 to 2025 respectively. On the other hand, the net interest expense shows a decrease of 157% from 2024 to 2025. Despite these discrepancies, it is clear that there has been a significant change in the company's debt level and interest expenses. The data suggests that the company's financial situation has undergone a substantial shift, with interest expenses increasing significantly over the past few years. This trend indicates that the company may be facing increased financial burdens, which could have implications for its future operations and profitability. The performance of various segments and regions in the industry has shown a mixed trend. On the positive side, single wafer cleaning, Tahoe, and semi-critical cleaning equipment have seen significant growth, with an 8.1% increase in 2025 compared to 2024 and a 43.3% increase in 2025 compared to 2023. Similarly, ECP, front-end and packaging, furnace, and other technologies have experienced substantial growth, with a 32.1% increase in 2025 compared to 2024 and a 46.2% increase in 2025 compared to 2023. Advanced packaging has also shown impressive growth, with a 45.3% increase in 2025 compared to 2024, although the growth was slower in 2024 compared to 2023 at only 3.3%. Mainland China has been another strong performer, with a 15.2% increase in 2025 compared to 2024 and a 40.2% increase in 2025 compared to 2023. However, some regions have struggled due to new regulations. Korea's performance was poor due to the impact of these regulations, while mainland China also experienced a decline in performance for similar reasons. The United States and other regions do not have revenue figures mentioned, making it difficult to assess their performance. Acm Research's outlook and strategy are centered around driving revenue growth, maintaining a strong gross margin, and investing in research and development. The company expects significant revenue from Asia for the near future, with increased sales efforts in North America and Western Europe. To achieve this, Acm Research will continue to invest in research and development to advance its technologies and maintain its technology leadership position. Management aims to maintain a gross margin between 42% and 48%, which will be achieved through efficient operations and cost management. The company also plans to rely primarily on cash flows from operations and borrowings from financial institutions, with the intention of maintaining a solid financing position. Additionally, Acm Research has formed strategic partnerships with companies such as Ninebell and has invested in various ventures through its subsidiaries. Overall, Acm Research's strategy is focused on driving growth, investing in innovation, and managing finances effectively to maintain its market leadership position. The company's outlook appears positive, with a strong focus on revenue growth, gross margin maintenance, and research and development investment. Acquisitions and divestitures are significant business transactions that can impact a company's operations and financials. In the context of Acm Research, several acquisitions have been identified. One notable acquisition is the implied takeover of Acm Shanghai by Acm Research, allowing the latter to conduct business in mainland China. Additionally, one or more businesses, technologies, and products were acquired by Acm Research, although specific details are not provided. On the other hand, divestitures refer to the sale or disposal of assets or subsidiaries. In this case, Acm Shanghai was previously a wholly owned subsidiary, but became less than wholly owned after the company's listing on the STAR market in November 2021. This change in ownership structure resulted in Acm Research's stake in Acm Shanghai declining to 74.6% following a private offering in September 2025. Furthermore, Acm Korea, a direct subsidiary of Acm Shanghai located in the Republic of Korea, was also divested. Other related entities were also disposed of as part of this transaction. These divestitures demonstrate significant changes in Acm Research's business operations and ownership structure over time. The company has a history of paying dividends to its shareholders. This practice is evident in the extracted summaries, which highlight various instances of dividend payments made by the parent company, Acm Shanghai, and the subsidiary, Acm Research. On page 34, it is mentioned that the company paid dividends on common stock, indicating a commitment to rewarding shareholders through regular payouts. Furthermore, on page 48, it is noted that Acm Shanghai paid dividends to its stockholders in September 2025, amounting to RMB 264.9 million, approximately USD $36.8 million. Additionally, pages 61 and 63 provide specific details about dividend payments made by Acm Shanghai to Acm Research. The amounts paid out in 2025, 2024, and 2023 are listed as $7.6 million, $28,480, and $19,200 respectively. These references collectively demonstrate the company's practice of paying dividends, indicating a consistent commitment to shareholder value creation through regular payouts. Concerns about inventory buildup and supply chain disruption are evident in the extracted summaries. On the issue of inventory buildup, there is a significant increase in inventories from $108.2 million in 2025, with a corresponding rise in provision for inventory from $2,796 to $15,485. This suggests that the company may be holding on to excess or unwanted products due to inaccurate forecasting. Furthermore, investing in manufacturing tools and raw materials has become increasingly expensive, with raw materials increasing by 56% from 2024 to 2025. The first tool shipments carried at cost and reflected in finished goods inventory also contribute to the concern about inventory buildup. Regarding supply chain disruption, several factors are at play. Tariffs and trade restrictions affect raw materials and supplies from the U.S., while regulatory restrictions impact sales to Chinese customers. Delays in development and manufacture of new products, as well as constraints on suppliers' capacity, further exacerbate the issue. The transition of certain components to be qualified at customer sites is also required to maintain consistent quality standards. While no significant interruption of business is expected, management will need to address these concerns to mitigate potential risks. That concludes the financial summary for Acm Research Inc. Feel free to comment below, and I will be happy to answer them when possible.